Welcome back. You're watching HFO-TV, co-sponsored by AMF Capital, the Ball-Janik Law Firm, the Butler Exchange Group, and the construction firm J.R. Johnson.
I'm going to go ahead and give a quick update on the apartment market from our standpoint. As mentioned in the last presentation about building permits, this is a chart of building permits within the Portland area. As you can see, we had a huge run-up in 2017. For most people, I'm sure you're familiar with inclusionary zoning. There was a deadline in 2017 where you had to get a partial approval to be excluded from inclusionary zoning, and that's why we had a significant run-up in 2017. This was just permits. Once you're permitted, you still have to go through the process, get it built. That could take anywhere in Portland, who knows, but anywhere from 18 to 2 years, and that's why you'll see an increased number in 2019 in terms of delivery. What we're seeing moving forward, and we've talked about this, it's in our site, on our blog, is the negative effects of inclusionary zoning. I'm not sure if everybody saw the article in the Wall Street Journal that John had mentioned last week. If you haven't, it's on our blog and on our site. It just talks about some of the policies that have been put in place that basically negatively affected the amount of deliveries of housing. As John mentioned, we are short in terms of population growth. So we're going to continue to have this issue, and we're not seeing an uptick in building permits since inclusionary. And we actually talked to the city about this and let them know this is what's going to happen. We have seen an increase in units under 20 because you're excluded from inclusionary zoning if you go 19 units or under. So you'll see lots that can maybe fit 30 units. The builder's going to go ahead and put 19 instead of 30. Again, net effect is we've got less units being built within the city because of some of the policies that have been put in place. And we have heard possibly there's going to be a change on that they're going to go more to, and we've talked about this before, more of a carrot instead of a stick in terms of trying to increase building within the city to address some of the affordability issues, but it's been talked now, and we haven't seen anything in paper. The next slide shows kind of a breakdown of where the construction has been on these permits, and again, it's predominantly, you're looking at close in East Side, Outer West Side has now had some units, North Portland has picked up as well, but again, this kind of shows, again, it's really centrally located in the core. A lot of that has to do with construction costs. As we've had a ramp up in construction costs, you know, it's tough to make a deal make sense if you're not at a high rent level with the high construction costs. And we have not seen, even with the decrease in permits in construction, we have not seen a significant decrease in construction costs. You know, there's enough public works out there. So again, the cost to build has not gone down. Actually, there's some fees now added on with the city. And so it's just kind of added as another kind of layer that's decreased the ability to deliver product. The state of Oregon has passed that 1% kind of gross receipt tax. And talking to builders, they're factoring in that's going to cost them about 3% on their cost because you have the concrete company that's got a 1% over $1 million, then you've got the subcontractor, so it kind of factors down, so it's almost like a factor of 3, and that's why they're fighting so hard to try to get construction exempt from that tax. But again, it's another example of some legislative power that's gone in that's going to affect the ability to deliver product in this market. In terms of transactions, the green line is volume, this red is what we call non-institutional private client deals, and then the bigger, the blue is 10 million and up in terms of transactions. We had a record number in 15, 16 in terms of volume. 16 was huge. This is through 3 quarters on 2019. We'll probably see very similar sales activity as we did last year. Even with what's going on in this city, we have not seen a significant decrease. Now, next year may be different, and we'll talk about that in a minute. So from terms of sales volume and number of transactions, very steady from where we were last year. I think a lot of that has to do with interest rates as well. And this is the amount of capital that's looking for yield. As you in a market with negative interest rates in Europe and low rates here, there's more capital looking for yield, and Portland is definitely on the map, the Pacific Northwest, in terms of a place that's a good place to get returns. Vacancy, now I will tell you this, and I say this every time I get up here, you're going to see variance of vacancy numbers all over. It depends on the report, depends on who's providing it. This was one from Multifamily Northwest showing a slight increase in vacancies from a 4.4 to 4.42. Again, different reports will show different numbers. We are seeing a slight increase in vacancies. We've had sub-markets range from 3.3 in that same report, which was close in East Side, to 6.6, which was Lake Oswego and West Lynn. I will tell you that's, again, some of it depends on if you've got new construction coming into a submarket, how is that calculated within a vacancy report. So when we're looking at vacancy, I use this as kind of a 30,000 foot level. If I really want to boil down on a particular building, I'm going to dig a little deeper on the neighboring properties. And same, even with increased vacancies, we did see an overall market increase in rents. Now, some submarkets have had softness. We've seen some concessions close in when the delivery of all the new construction, but overall as a market, we have seen a slight increase in the rents per square foot. And again, you're going to see always different numbers depending on who has the forecast. You know, you already forecasted a 5.3, and multifamily Northwest had a 7.4 in terms of the rent increase. So again, we kind of look at it as a 30,000 foot level to get a barometer on the market, but we'll dig in deeper on individual complexes. Now, I think I had this slide last year, I can't remember, but so we do know 2000, as John mentioned, 608 passed. We're being told that Tina Kotek does not want to reopen 608. I say that, but then last week there was the article about some of the affordable groups, getting harassed about not being exempt from their statewide rent control. From what we're hearing on the Democratic side, or the Democratic leadership in Salem, is they don't want to open up 608 again. They've got other bigger things to deal with. Cap and trade is going to be the big one, but you never know. So we'll see what happens on that. It's a continue, to educate and have to go down there and fight on this thing, but that's what we're hearing right now. But again, we heard a lot of stuff the last couple of years that didn't come to fruition either. State of Oregon, or Portland's a whole different deal. I know we've said a lot of stuff about fair access, which is supposed to come in place in March. If you don't know about it, go on our site and look about it. This has to do with not your existing tenants, but future tenants in terms of how you process applications, how you do security deposits, background checks, and things like that. It's supposed to go in place in March. I'm hearing it may get pushed. We don't know. In terms of transactions, I think this legislation, more than rent control, is going to drive transactions for what we would call mom and pop owners or self-managed groups, because of the weight of trying to adhere to the policy. It's very vague. It's very tough to deal with. It's ripe for tenant lawsuit kind of deals. I think you'll see some transactions of people getting out of Portland just not even wanting to deal with this if it passes. Now there's talk there will be, I would imagine, a lawsuit going to fight this. We're waiting for the administrative rules and then finding out when it will actually come into place. But right now it's on the books to start, I think it's March 1st. The city is taking public testimony and written testimony through January 17th. So I encourage everybody to submit something, talk to your management company, and let them know how tough it is to deal with this new policy that they have in place. The other thing about the city of Portland is you have the potential for 4 new council people this year. We heard about Nick Fisk passing. You've got Chloe Daly up, Ted Wheeler, and Amanda Fritz is retiring. So we have a whole new potential crop of people coming in city council. Could be good, could be bad, depends on where it works. Basically what I'm trying to say to this group is we need to be active and organized and try to get some people that understand our industry and understand what we go through. We're providers of housing. When you read the paper, it's so one-sided. So trying to get that story out, and I implore everybody to, again, talk to people talk to your management company. We need to continue this and have this out in front and center. For predictions, gradual interest rate hikes, is we always, we've been talking about interest rates for 20 years, and we feel like we're never right anyway. Who knows? I mean, I don't think we're going to see a huge sharp run up on them. They'll go down a little bit. They may go up depending on what we hear, as John mentioned. We are continuing to see investor demand in tertiary areas outside of the city of Portland. Salem's had a lot of growth. We've done a lot of stuff in Spokane. So we are seeing capital looking for yield, not always just tied to major metropolitan areas, and looking for other areas within the Pacific Northwest. Employment growth, I think it'll continue, but as John mentioned, maybe not as robust, and it'll be steady. Permits slowing, we have seen that. You'll see spikes here and there, but across the board, permits are slowing. A lot of that has to do with construction costs. If we have any jump in interest rates, you couple that with construction costs, it's going to make it really, really tough to get some of these units built. Now, rent control, you are exempt for 15 years on rent control in new construction. But again, when the construction costs are where they are, you've got limits, and now it's going to be more expensive to put people in your building. It's going to add to, the return, the lack of return. It's going to make it tougher and tougher to do these. I think we'll see flat vacancy rates and rents as well this year. There'll be there could be a jump here and there depending on the submarket. Political forces in play, we've kind of talked about that, but I think that's going to be an ongoing thing with this industry for, the short term for sure. And again, we're seeing continued capital flow in the Pacific Northwest. I mean, the good thing is, we are in a market where capital wants to go. We start seeing increased capital coming up from California. We were the first state to get statewide rent control. Then California went on top of us and made one that's even worse. So we are seeing a rash of capital coming up here again to get, to invest up here. So overall, the market's been very strong. Transactions have been strong. Next year, depending on this, what they call fair access for Portland, will be a big determining factor, I think, for a lot of owners in terms of do they want to stay in this, do they not, and kind of what they're going to do moving forward.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.